Hello, everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it.
All right. Hey, everyone. Welcome back to the show of the Amateur Investors. We have our first returning guest. We've got Jim Crider back from episode 17 of Life-Based Investing, so we're really excited to have him here. Just a first shout out to our sponsors, Coinbase.com. They have a wealth of knowledge of all things Bitcoin on their website, from articles and links about where to buy Bitcoin, what's the best hot wallets, what's the best cold wallets for self-custodying your Bitcoin, the potential risks of Bitcoin, and much more. It's been a pleasure partnering with them, and you can always check out the episode that we've done with Adam O, aka Denver Bitcoin, episode 42, and we'll be bringing a couple more episodes in the coming months with a lot of their pros or professionals. So really excited for that, and we're really excited to have Jim back on the show. Jim, thanks for coming on.
Man, I'm glad to be back here. Thanks for having me.
Yeah, so I know last time we were really talking about like life-based investing, and I know you said you wanted to come back on and potentially do more of the psychology side of things. So I guess that one was more, like strategizing and planning and kind of like your mantra around investing. But for someone that's new or an amateur like me for getting into investing, how would you recommend, aside from the numbers, the calculations, evaluations, all that, how would you help coax someone into investing or different aspects of investing?
Yeah, well, not to beat the same drum as our other conversations, but it does go back to tying in. If you're going to invest, you need to do so with the end goal in mind. So you have to be anchored in, like, well, what am I hoping to accomplish here? So what's the vision? That way, as you assign actions, you're doing so purposely and intentionally. So I mean, for instance, a lot of people jump to asset allocation. So, what stocks or bonds or Bitcoin, however you're going to invest, the actual investments themselves. But before you establish asset allocation, you have to establish your asset location. So what type of account am I going to use? Will I be using a 401k or an IRA or a Roth IRA or a 529, or is this going to be in a taxable account or what? And if you don't understand what that money is going to be used for, it's hard to identify the best place to keep those funds. So yeah, understanding what's the end goal will inform the actions you take. Like, Chris, I'm not sure if you're familiar. Have you ever heard of Couch to 5K?
No, I have not heard of that.
So it's a program. It was a program that was started because basically this guy was trying to figure out how do I go from being out of shape to running a 5K by this period of time. And that's for being out of shape, sitting on being a couch potato, that's a big ask. Mm-hmm. So what they established there was, well, gosh, we need to have an end goal in mind. That is, by 4 months from now, we will run a 5K. Now, we also, between now and then, we're going to establish steps. Day 1, you're just going to get off the couch and just put your shoes on. Day 2, you're going to run to the end of the block. Day 3. So again, starting with, well, what's the end vision? And then from there, you break it up to small tasks. So those small tasks of investing would be, asset location, then asset allocation, all of these things.
Yeah, that's really cool. So I know it seems, I know we always talk about, stocks, bonds, Bitcoin, whatever it may be. That's kind of the wheelhouse that we're in. Obviously, there's, I wouldn't say less traditional. Real estate, I'd consider it traditional. But I guess I know you've done with high net worth individuals. How would you recommend if they're investing in alternative assets, whether that's sports cards, art, wine, things that are like, I guess, outside the wheelhouse of normal, whether it's collectibles of anything, I don't know, stamps, coins, whatever it may be. I know that's kind of outside the realm of traditional, but I guess what would you advise for someone that's like, I've noticed just on Twitter and stuff, a lot of times if they're not drawn into whatever you're doing, it's hard for them to get excited for Apple stock or Google stock or whatever it may be, basically.
Yeah. Sorry. Can you clarify what's the question there?
Yeah. Sorry. So basically, like, how would you advise someone that's like wants something that's less traditional? If you're advising someone that loves art, but like you're, a CFP, but you don't know as much about the art field or whatever it may be.
Yeah, no, that's certainly fair. Yeah,
I wasn't.
I can.
Maybe you know a lot about art. I don't know. I was just saying, just throwing it out there.
No, I like to pretend I know more about art than I do. I can enjoy uh, some good art, but definitely I'm not the guy you're going to bring in to value a piece that you came across. Um, yeah, frankly, there's parts of my job. Obviously, my role is in certain areas to be the expert and fully understand how this will affect your life. But there's also places of, gosh, like you just mentioned, I'm not an art expert. I'm not a CPA. I'm not an attorney. Now I do understand that, hey, if you're here, like Chris, you should probably have a will and your business for for amateur investors, you want to make sure that you have this business entity structure established. But I'm not going to go and like actually write your legal entity documents. That'd be a bad idea. You wouldn't want me to do that. However, I can see how that's going to fit in for liability protection purposes, for tax planning purposes, those sorts of things. So in the same vein of thought, someone comes to me and says, "Hey, Jim, I'm into and I certainly enjoy traditional investing, but as a hobby and also as a means of building and maintaining my net worth, I also like these alternative assets, be it art or fine wine or stamps or whatever that is. I need to recognize that I'm not the professional there, but also not dismiss it, but actually fully understand. Well, hey, why is this important to you? What's your experience here? What's your expectations from this, as far as the income or future value and your means of managing? The problem here is I've seen a lot is the moment this happens a lot with CFPs because we go through a lot of work and testing and studying to get where we're at. The moment something that was not in our textbooks come along, we quickly dismiss it because that's not in the CFP textbook, therefore it's garbage. But yeah, part of my job is coming to understand, like, hey, why do you think that NFTs are going to be valuable? I want to hear about that. What's going on here? What do you see here? Let's talk to an expert who knows more than I do, and we'll have that conversation in context of your full plan. So
Yeah, no, I think that's a great one. There's a guy I follow on Instagram who he runs over a seven-figure business with sports cards, and he hires like 12 employees, and like he's doing better than what most people would consider. It's an alternative asset class. He sells sports cards, but he's obviously very good at it, better than most. Goes to shows and stuff, but it'd be interesting for someone to just be like, oh, like it's no big deal when he's like raking in like $7 million, $6 million a year. It's like that's not something you should just turn away or say that's not good. That's very good.
Yeah, that's where I think you see a lot of riff in the Bitcoin versus traditional finance is like, so many people in finance, so many people like me just dismiss Bitcoin people as like lazy or dumb or lucky without coming to understand like, hey, why do you do this? What do you think the value is here? Not just, hey, there's no cash flow on it, therefore it's not worth anything. Let's move on. There needs to be collaboration and understanding before we make a judgment.
Yeah, and I think that's a great example. They always say, oh, there's no cash flow on this asset. It's like, yeah, well, there's no cash flow on art, and some people do very well in that business. There's no cash flow on certain asset classes, and people do very well in them. So it is very interesting. I guess go ahead.
I was going to say cash flowing art, you can just, tear off a piece of a Rembrandt and then Rembrandt and go cash that piece in, as part of a bond coupon. All right, here I want 10% of this Rembrandt painting is going to be cashed in now.
Yeah, exactly. So I guess kind of pivoting into that. So this is kind of going into not only just alternate asset classes, but a lot of times people obviously give the explanation like, I don't have enough money, money's very tight. And obviously everyone's financial situation is very different from person to person. But how would you recommend starting off someone that says they can only invest $5 a week, $10 a week, $20 a week, $100 a week, whatever it may be? How would you, I guess, coax them or kind of, using, I guess, your analogy from couch to 5K, how would you help them getting into it?
Gosh, so much of this has to do with anchoring into identity. So if you, again, not to rehash earlier this year's conversation, but you need to first understand, why am I wanting to save money? What's the vision here? Like who do I actually want to be and how does this support that? If it goes along the lines like couch to 5K. If I said, hey, I want to go to the gym, so I'm jacked and shredded. That's probably not going to last very long because I'm in my 30s now, and it's harder to have the physique that I used to. My motivation now is I want to live a healthy life, so I'm able to do stuff with my kids before they're before or as they age. So I anchor what I want and my actions together. So it's rooted. So therefore, whenever I'm feeling tired and don't want to go to the gym, I remind myself, hey, this is for the kids. So when they're 18, I'm still able to go out and go hiking. Okay. So if I only have $5 to save, I only have $10 to invest. Well, go back to why am I doing this? And the next thing is anchoring your identity here. So you need to identify not as someone who invested once, but as an investor. So there's I think it's James Clear. He has a weekly email, and I think that's where it came from. A few weeks ago, I saw that he posted that if you want to become someone who identifies as someone who goes to the gym daily, and it's just hard for you to go to the gym for an hour, like step one, get up and put your workout shoes on and just go to the gym. Like, don't even go in. Go scan your pass and leave. Because just doing that, you're building the character trait of I'm someone who goes to the gym, and it becomes part of who you are. You're not I have to go to the gym. You are I'm someone who goes to the gym. So yeah, investing $5-10 a day. Suddenly it's like I threw a few bucks here. It's no, I'm a regular long-term investor. Okay. So also I know it's hard. It's like, gosh, I only have a few dollars. That will never make a dent in my long-term future. Well, if we look at what you're doing as you're trying to build a harvest, and a harvest comes about by planting seeds over a period of time and then watering those seeds and then allowing those plants to grow, and eventually you'll have a harvest. It's not a quick one thing. And that's what a lot of people look for is a quick fix. They're out there trying to hunt and get the big kill immediately. No, go out there and plant the seeds. And then one day a rain will come, hopefully, and all those seeds that you've planted, those $5 seeds over time, you'll start bearing fruit. And I was talking to my wife about this probably about a month or so ago. We were talking about our net worth. I'm 31. In January, our net worth hit right at like $1 million, right as I turned 31, which was pretty cool. Like I wanted to be a millionaire when I was 30. So I was like, we could debate if I hit it. So it was right there. And we were talking about that, how neat that was. And she was like, well, can we say that was mostly because of Bitcoin? We invest a lot of money in Bitcoin. That's not a solicitation per se. But yeah, she's like, well, couldn't that just because we got lucky with our investments? It's like, well, babe, for 5 years, we had about a 40% savings rate. We had
and not to cut you off there, is by savings rate, you mean investing rate, like investing into your savings basically, right?
Yeah, exactly. So okay. Kendra, my wife, her name's Kendra. Kendra and I, we haven't made phenomenal money by any means. But from when I was like 25 till 30, our household income, was between together, the two of us working was between like 80,000 to like maybe 110. And yeah, we averaged about a 40% savings rate.
That's awesome. Yeah.
Yeah. And that is what allowed us to grow. Had we never just, hey, we're going to aggressively save. Yeah, we made a lot of money or a great rate of return through Bitcoin. But if we didn't have seeds planted, it doesn't matter how big of a rain comes, it's not going to have the opportunity. So I'm not saying that to toot my own horn, but yeah, $5 a day may look like nothing, but you're never going to have the opportunity for growth if you're not planting those seeds. So just remember that. Keep at it. And again, it's not about trying to get these quick wins. It's about identifying as someone who is planning and saving for the future. You are an investor. Investing is not something you just do.
Yeah. I love looking at the way of doing by percentage. Like even if it's only 1%, 0.5% of your net worth, if you're advancing your career, like the quickest way to make a lot more money, I know people are going to say, oh, we'll sell a business or do that. Like, yes, I'm well aware. You can make money very quickly doing a lot of crazy things with investing or various things like that. But for the layperson or for the majority of people, the fastest way to increase your net worth or the amount of money you're making is by doing that, by changing jobs for a higher paying job. I know that's hard in the economy that we're in right now, and there's a lot of times people are looking at different ways to go. But kind of along those same lines, if you're putting 0.1% and you're making 20,000 a year, but then you jump to 30,000 a year, you've just, increased the amount that you're investing if you keep that percentage the same by a lot, by like 50% increase. So it's just a good thing to do. And even if you keep the percentage the same or if you bump them up, that's kind of a quick way to make money. So
Yeah.
picking up once again from where we left off in the last episode, I know you went down values, goals, decisions, and actions. So what do you have, what advice do you offer your clients that are we're going into uncertain times with, not people not knowing with what's going to happen with the coronavirus, people not knowing with what's going to happen with their industry, are we going to stay further remote? Are, who's going to go back? Are you going to quit? Are you going to take a new job? There's kind of a lot of uncertainty in the air, especially the market seems to be hitting all-time highs in the S&P 500. So you think if we're going to recess down to the mean or there's going to be a crash, there's a whole list of reasons that can happen to anyone or any one person. So what would you recommend to them going into uncertain times?
So one, philosophically, I know I keep going back to philosophical stuff, but anchoring in to your purpose will help you have confidence and clarity and peace of mind during turbulent times. Okay. So you need to first start off with begin with the end in mind. What's the vision? Again, there's a quote I like. It's when your vision is clear, your decisions are easy. So be very clear on where you're going. That way, when turbulence happens, you're anchored in something. Okay. Now, two, you have to understand, like, things always look scary. And I know, like, right now is absolutely nuts. I recognize that. Like, bonds are paying next to nothing. Equities, we could debate, are, they're very, very highly valued. Having money in cash is dangerous because inflationary pressures. So where's a safe place to put money? Like Bitcoin, I'm wearing a Bitcoin t-shirt right now. Like I love Bitcoin, but it's highly volatile. So where do you put your money? And yeah, I had a client reach out yesterday, and we're changing allocation in some funds. It's a new client. We're moving from, he was way under allocated. He had way too much bonds. He's young. He had a whole lot of bonds in his portfolio for whatever goofy reason. His old manager had him in that. And I said, hey, we need to increase your stock allocation in this portfolio. And he said, well, Jim, should we wait until the next downturn before we do this? And I just reached back out and I said, hey, like, if we were doing that, we had been waiting for the last 6 years.
Yeah.
I know lots of people who, it's the Chicken Little syndrome. You're sitting there waiting for the sky to fall day after day, and you're missing the opportunity to go ahead and just jump in. So, and obviously, like, looking at the micro and the macro environment has its role in place, but living in fear of what's next, that tends to be, for the most part, the biggest hindrance to actually succeeding. You just need to take intentional action from the get-go.
Yeah, no, I have one of my good friends. He's in like still 40% weighted in bonds, and I helped kind of talk him down. He's young, he's my age, and like luckily he's doing very well for himself. He has a very healthy retirement in terms of the amount of money in there, and in terms of he actually has a lot of money in hand on cash as well, which is dangerous, but like he has enough that it's like, okay, this is a lot of money. Like, he's doing very well. And but I was kind of like, maybe we should change the allocations around or kind of help coax him through. He's like, well, this is a hedge in case things crash or correct. I'm like, you're way over allocated in bonds for how young we are. Like, you should definitely be weighted more into stocks. And I know he's taking more of the traditional advice, but I was willing to talk to him and help him out with changing that basically.
Yeah, I mean, who knows how long he's been sitting in bonds and cash? Like, what if it was when the Dow was at 18,000, and it's like, oh, well, I'm going to wait, and it's like, dude, if at this point, if the Dow gets cut in half, like, you're back where you were. Like,
yeah,
you could just
exactly.
Yeah. That's a dangerous game to play. You need to go into it with eyes wide open of the risk you're taking. There's risk in everything you do. That's the problem.
There's a risk in doing nothing, and that's literally what people talk about all the time too.
Exactly. People think I'm going to go sit in cash. That way I'm not taking any risk. Yeah, it's like saying I'm just going to sit in my house and not do anything or go anywhere, so I'm not taking the risk of getting in the car wreck. Meanwhile, you sit in your house for 40 years, get obese, don't have any vitamin D, and then you died of a heart attack early because you never left. Like, that was risky too. You just didn't see it because it ate you up over time.
Yeah, or staying in your house as it's on fire. Like that's oh, I'm gonna stay here because I'm safe, but the house is on fire. So yeah, you're damned if
Exactly.
you do and you're damned if you don't. So there is risk in investing in anything, and you'd be the first to say that about any asset class: bonds, real estate, stocks, whatever it is. There's 100% risk in anything. Anyone that says you otherwise, you run the other direction because that's not true about anything. But yeah, exactly. Like there's a risk in doing nothing. So I guess kind of moving more into that. So I know we've talked about allocation and kind of what to do in uncertain times. So I know you're big into Bitcoin, which is contrary to what most CFPs are. So how do you advise your clients that don't know nothing about it? And then how do you advise other advisors, advising the advisors that don't know much about Bitcoin? Because I would say you're probably one of the more knowledgeable ones that at least I've met of CFPs.
Yeah. So how do I advise as far as like asset allocation or just education point, or what do you
Yeah,
have in
so
mind?
let's go with advising clients first, and then advisors, and let's do education and then allocation for
Yeah.
if you
Well,
want to do for both.
yeah. One, you just made a good point there. Education before allocation.
Yeah,
Especially with something like Bitcoin. I don't want my clients to invest in Bitcoin, and the only thing they know about it is FUD. Because the moment something happens, they're going to freak out. I take a lot of pride in the fact that not a single one of my clients reached out when Bitcoin dropped a few months back. You remember that back in June,
yes, yeah.
July
When
when
it
it
fell
dropped.
from like 64 down to like 29K briefly, 30K range.
Exactly. I relish in the fact that, yeah, not one single client reached out and said, "Hey Jim, what's going on? I'm freaking out." Despite the fact that my clients generally have 10 to 20% of their total portfolio allocated toward Bitcoin and Bitcoin related companies. So you need to properly educate before you allocate, especially with something like this. So how do I educate? One, it's just introducing, like, what is this? Um, what's what how have you been exposed? What's your experience with this? Let's overcome any fears and uncertainty and doubt and rumors and myths. And what role does this play in my opinion? Could this play? And then why do I see this as an important part of a portfolio? So it works its way from like just generally like, what is this? How does it work? To like, okay, why are we going to put this in a portfolio? And that's where I introduce basically talking about, hey, houses cost more than they have ever cost before. Assets are stocks are quite expensive. Bonds aren't paying anything. Uh, Cash, you're getting eaten alive by inflation. Where's the safe place to put your money? And why do you think this is happening? And then we talk about Bitcoin as being, in my opinion, a life raft from the possible you know flood to safety from these other things, and that's why we implement this. So that's how we go about. And then from there, once we have an understanding of like what this is, what are the risks, what's the volatility, then we start assigning portfolio allocation for the different types of portfolios and such.
Yeah, that makes sense. So I guess then, how do you advise advisors? So you've talked about the client side of thing. How would you advise advisors that they don't even have to be older? They could be your age or even Gen X or baby boomers. How would you advise them of they've never touched it or they've only historically known it as tulip mania or as a Ponzi scheme or as this magical internet money that's a scam? So how would you advise them to talk them back off maybe some of the legacy things that they've learned about Bitcoin?
Mm. Yeah, I regularly have other advisors reach out to ask me about this, and I've got a lot of requests actually to start a separate company to advise advisors on implementing and merging Bitcoin into their practices. And again, it really goes back to uncovering what beliefs do you hold on this right now, and then okay, what is the truth behind, like, what really is Bitcoin versus what you perceived it to be for all these years. And once we establish the understanding, like, people's perspectives change pretty quick. Like, if you're running off of a preconceived notion that's incorrect for the last 6 years, and all of a sudden you're aware of the truth behind it, you're, as long as you're open to change and wanting to actually continue to grow and learn, you're going to want to adopt this relatively quick. So it's having those conversations like, hey, what actually is this? And then, yeah, why have I decided to take this and implement in my firm? And why would it maybe make sense for your practice? I work with a younger clientele type than most, but even retirees. Why would it make sense for someone who's in their 60s to have allocation towards Bitcoin? Not just someone in their 30s. So
Yeah, I think
yeah.
that's valuable, especially like it's we're kind of investors in general. You're using past results normally or historical results, and then you're trying to project into the future, which no one knows what's going to happen. So in a weird way, like investing is just kind of it's educated guessing or just throwing money at the wind, or it can be a whole list of things, or people that just get very lucky. I've heard of that as well. I don't know. Do you want to add on that? I guess it looks like you want to say anything.
Yeah, that's the funny thing. Like, so many financial planners act like we're the the key holders to all knowledge. And it's like, hey, in this plan that I'm going to create for you, will tell you what your life's going to look like in 60 years. And it's like, my gosh, you have no clue. Like, you don't know what's going to happen with taxes, with investments, with the macro, with the micro, with any of these things. Let's stop pretending. And let's take the value off of delivering a one-time plan to having an ongoing relationship and planning. Like that's massively valuable. And stop acting like you have all the answers versus my job is not to be the bearer of a one-time document, but rather to be a guide in a changing landscape.
Yeah. So I think I want to touch on another point. So obviously you said you had a lot of your clients and none of them reached out when their portfolio withdrew down, especially on the Bitcoin side of things, like a 50% correction or a little bit more than a 50% correction. So that's another thing I want to touch on, kind of getting to the psychology and the emotional side of things. How do you keep clients from panicking in especially with social media and just instant gratification? There always seems to be another chaos around the corner or FUD or whatever it may be in any market, real estate, stocks, bonds, mutual funds, Bitcoin, crypto in general, whatever it may be. How do you keep them from going off the ledge or you're freaking out or basically you get into market timing at that rate when people are panicking?
Yeah. Don't watch CNN Money or Fox Money or any of that trash.
Fast Money or any of that.
Yeah. What are you doing? Like you're setting yourself up for failure. Like there is a very high correlation, and it's inverse correlation between investment performance and the frequency you check your accounts and look at things like investment news. There's been so many studies that show like, hey, the more often you check your accounts, like you're probably going to underperform your peers. Some say it's not true, but anyways, there's supposedly a study done by Fidelity a while back of investment accounts. So people who had their own self-directed investment accounts. Fidelity supposedly pooled these rates of return, and the people who outperformed their peers significantly, they reached out and they wanted to find out, how are you doing so much better than your peers on managing your investments? And there was a consistent theme there. The people they reached out to either forgot they had that account, or those people were actually dead and it was never claimed by their beneficiaries. So versus obviously the other people, the other end, you have this gamification of checking your accounts every 3 minutes and watching these charts. Like that's so unhealthy. Like imagine if you could watch the value of your house change a few times a day. You'd probably be freaking out that, oh my gosh, we shouldn't have put those new floors in. Like we just lost 10 grand in equity in our house. Like it's okay. Are you going to move today?
Yeah, no, exactly. I think there's a great Warren Buffett quote. I know he doesn't get Bitcoin, but he always said, like, if someone kept every day, a guy would show up outside your house and yell the value of your house. And if it's down, you don't immediately rush out to sell it. You're going to keep living there. Exactly like you said. It's like, as long as you're not planning to sell it tomorrow, you're fine. And if you plan to hold the house, I know generally they recommend 7 to 10 years minimum. So as long as you're not doing it before then, you should be fine in the long run. I know there's extenuating circumstances and you don't know what can happen then or what the market's going to look like. But generally speaking, you will be in a better place in that amount of time. Where I don't even know where I was going to go with this. I guess so. So that's another thing. So it's interesting. I know you said 10% allocation of Bitcoin, and I know I don't want to make you say, have this percentage of allocation because it varies completely person to person, and you don't want to give advice for you not knowing someone's situation. But I guess what do you normally like to be exposed to? And I won't make you say the percentages to not put you in a bad position. You can if you want, but are you kind of more traditional stocks, maybe a little bit of bonds as a hedge, gold as just the hard asset itself, Bitcoin, real estate? Like, I guess what combination, or do you kind of personalize it person to person, basically?
Yeah, I mean, obviously it's personalized. That's my job, is to be a certified financial planner for individuals and families. So that's what I do. But I was like I mentioned a few minutes ago that the vast majority of my clients, almost all, have 10 to 20% of their entire portfolio. Not what I'm managing, just that, but their entire investment portfolio. So if they have an active 401k, we consider that as well. But generally 10 to 20% of their total investment portfolio is in Bitcoin or Bitcoin related companies. Yep. So that's not a rule of thumb per se, but that is what we see. Outside of that, I have clients that own real estate. Also, we consider like business and investment. So you actually own a business, and do you want to continue to scale that? And outside of that, if we're just looking at like a traditional portfolio, let's call it a Roth IRA. obviously, like if you have a Roth IRA and a traditional IRA, you want to look at risk return opportunities and stack your higher growth options inside of the Roth. That just makes sense tax wise. But just for fun, let's say you have a Roth IRA with $100,000 and you're 30. Understanding your risk and your time horizon, hypothetically, we're gonna maybe look at 10 to 20% in Bitcoin stuff, and then the remaining in. I'm a pretty boring investor, so the remaining of that's probably gonna go just in plain vanilla
Index fund.
ETFs.
Yeah.
Yeah, just keep your costs low. We're not trying to beat the market here. Keep your costs low, be tax efficient. Obviously, that doesn't matter inside of a Roth IRA, but yeah, be tax efficient, be fee sensitive. Have good domestic, international exposure. And yeah, if we're looking at like a shorter time horizon, maybe Chris, you told me, Jim, I want to buy a house in 2 years. How do I invest there? We don't want to YOLO into 100% stock portfolio, because if that house purchase coincides with a market correction, you're not buying that house.
Yeah.
So we have to consider how do the closer the time horizon, the more sensitive we need to be to volatility. So we do look at those sorts of things as well. Does that answer the question?
Yeah, definitely. So then I guess we'll get into one last like little segment. Oh, go ahead.
So here's the interesting one. I do want to highlight this. I've actually never talked about this on a podcast.
We get an exclusive here.
Yeah, this is exclusive. But wait, there's more. Don't take this as advice, because this is a very probably scandalous thing to say. And this is what Kendra, again, my wife, her name's Kendra. Kendra and I did this last year when we were 30. I was 30, she was 31. We had right about $100,000 of investment assets. That's in taxable accounts, IRAs, Roth IRAs, those sorts of things. At that point, that was March of last year, and said, babe, looking at Bitcoin and understanding halving cycles and the implications of that historically, I think what I would like to do is put everything into Bitcoin and Bitcoin companies, if that's okay with you. And I would think that by the end of next year, like we'll either be broke or doing pretty well. So we, in full view of the possible implications of doing so, we moved all $100,000 into Bitcoin and some mining companies and Grayscale, just because of the implications of having it in certain types of accounts, those things. It's paid off very well. How we made that decision, the reason I want to bring that up is at that point, I was 30 years old. $100,000 was 100% of my current investment portfolio. However, my goal is to have work optionality by the time I'm 45. Okay, now stick with me here. I'm getting a little bit. So by 45, I want the option to not have to work. Based off of my income, not currently, I'm not making any money right now. I'm building a business. But my assumption is between 35 and 45, I'll be able to save for investments roughly in today's dollars, $200,000 per year. So $200,000 per year for 10 years. And we'll assume, let's just say a 7% rate of return is the number I use. So for 10 years, at a 7% rate of return, contributing $200,000 a year, at 45, I would have roughly $3 million. Okay. So if I zoom out and say right now at 30, I have $100,000, but based off of my expected savings rate and assumed rate of return, I'll at 45 have roughly 3 million, not considering this $100,000. Well, then that gave me a little bit more comfort. If I zoom out and look at the percentage, not of my current portfolio, but of my lifetime portfolio, that's where it gave us the peace of mind to put all of that towards this more aggressive asset. Again, that's an odd way of looking at it. That's a very risky move because, again, we're allocating 100% of our current portfolio, but understanding that, our savings rate is going to, massively increase, and because of that, we can take these risks. So I'm curious, like, what's your thoughts there? I haven't, that's a conversation that I haven't really come across, even with other financial planners, is considering not just current portfolio, but future portfolio and how you allocate investments. Like, do you have any thoughts there?
Yeah, no, I think that's really interesting. Obviously, I'm a lot into Bitcoin. I'm not 100% into Bitcoin, so I know I say I'm a Bitcoin maxi, but I have a lot of stuff that's tied up in 401ks and Roth IRAs, and I did buy a house earlier this year, so I kind of have a bunch of different things in a different basket. So, but I'm looking to try and move some of that more into Bitcoin and get a bigger percentage there. I know that's kind of seen as risky, but we are young, so there is time to make it up. I am always constantly investing. Anytime I get money, it's kind of like I think this is another Warren Buffett quote. It's like always pay yourself first. Obviously, if you're getting a traditional salary, you're obviously taxed first. So if you're running a business, you know that when you receive revenue, you can spend it before getting taxed on whatever's left of the proceeds. So that's kind of one of the benefits that the ultra rich or wealthy do in order to benefit taxes and kind of utilize more of the money that they're getting. So yeah, no, but definitely trying to change allocations and kind of adjust with the markets as they're going. I guess I wanted to, before we start wrapping up, I kind of wanted to go into one little more segment or one little thing. So it's very interesting. Obviously, we saw Bitcoin get adopted as legal tender in El Salvador. What was that, just about a week ago at this point, last Monday? But then at this very same time, today we had Gary Gensler in the Senate committee meeting where he was talking to, obviously, a bunch of the U.S. senators. It looks like, and I don't want to speculate, but obviously it looks like the SEC is going to want to crack down on what seems to be pretty much every altcoin, either all altcoins or basically the vast majority of them, calling them as securities, which would obviously fall under the Security and Exchange Commission or the SEC's broader view of what their jurisdiction is. I know Gary Gensler is kind of, I won't say he's a Bitcoin maximalist, but he obviously sees Bitcoin in a very different light than any other altcoin. I won't name any because I'm not trying to shill any of them. But this kind of goes back to the FUD thing. So at one side, you have the first nation to grasp Bitcoin as legal tender. Obviously, we're still waiting from the IMF of how they're going to handle it. It seems like they're going to push back and say, oh, we're going to just dollarize whatever Bitcoin they have because they're a dollarized nation, even though they're looking at it as legal tender. So it would be really funny. I think the president, Bukele, is going to really mess with the IMF or the U.S., who he owes debt to, by like, oh, sorry, I don't have any cash. I'm just going to pay you in Bitcoin. And then it gets to be like, who blinks first? Like, are they going to count it and like tax it, or like how are they going to handle that when that's kind of like the touche of like, oh yeah, I ran out of cash. Here's cash, and then here's Bitcoin. What are you guys going to do with it? So it remains to be seen. But I could fully see that happening. Now I'm just ranting. But I guess going back to that of like, we obviously on one end, we have a nation that's the first nation to adopt it as legal tender. And then we have it in the very same meeting, it seems like it's going to be favorable to Bitcoin, but there is a lot of uncertainty of how they're going to put it under their regulations. Obviously, even though they may be more favorable to Bitcoin, that doesn't mean they might not change the reporting requirements. That doesn't mean they're going to change the tax regime of it. I know Elizabeth Warren wants to ban it altogether. I'm glad she's not running the SEC. I'm just going to go with that and put that on the record. But I guess kind of going off that, it's like, how do you look at an asset that's like so highly debated, so highly volatile, and like what's the next steps? Not that anyone knows, but just talking to someone that knows nothing but would hear these two pieces of news.
Gosh.
Sorry, I know I threw a lot out you there. I kind of ranted there for a minute.
So just to make sure I'm answering the right question, like basically how do you process these conflicting types of news?
Yes, exactly. Yeah, and obviously Bitcoin is very volatile, not just in the nature of the price appreciation up and down, but also the news. You got 1 minute saying it's going to be banned, the next minute the nation adopting it, another nation saying, oh, we need to regulate this harder. So like you feel like you're doing double takes. You don't know who to listen to or what to look at, basically.
Yeah, everything about Bitcoin's volatile. Even the people, like, you have
the community.
You have these celebrated people in the community. All of a sudden, everyone hates them. It's like, man, this is a harsh group. I'm afraid to tweet anything of getting backlash.
They're a tough crowd for sure.
Yeah, tough crowd. No, yeah, I would say two things there to help. One is zoom out. This is very new. Obviously, things that are happening now can and will have implications for down the line. There's possible, things that are happening are setting precedent. But don't put all of your hopes and stakes or fears into today's news. This is early. There's still a lot. I wear a different Bitcoin shirt most days, and most people don't even recognize what's on my shirt. So if we just take that as just a quick just test of who's familiar with this, like very few people. So just keep these things in mind as we look at what's happening in the macro environment. Um, and in my opinion, each of these things that are happening is good for Bitcoin. Like, man, a few months ago, I'm sure a lot less people knew about Bitcoin than do now, just because of these recent events. And yeah, some of these events may seem bearish, but the fact that it's out there, to me, that's bullish. So again, zoom out. Just remember, it's still very early. Don't tie your hopes and fears on today's news. But at the same time, like, you also want to be considerate of, recognize that there's a difference between what you hope and then what is reality slash probability of events. Okay. Now I know I would love for Bitcoin to hit $1 million tomorrow. That's a hope. But to say that it's going to happen with confidence would be outrageous. And that's an unfortunate thing. I really do think it discredits the Bitcoin community. Is, on Twitter, you see these people posting, like, I see it every time we hit a new rounded up like $10,000 mark, like when it hit 50,000, a couple days ago or last week, whatever. I don't know how many tweets I saw of like, we'll never see Bitcoin below 50,000 again. I'm like, that'd be cool. But, in 10 minutes when it hits 49 and change, you're going to seem goofy. Can we stop saying stuff like that? So again, don't tie what you hope with what's probable reality. And like that's going to go in the form of like, I've had lots of conversations with people who are like full Bitcoin maxis and like everything's in Bitcoin. They don't want anything in Roth accounts or anything else in these tax advantage accounts, because one day they are absolutely confident that Bitcoin will be legal tender in the US and they'll never have to pay taxes on their zillions of dollars that they're going to have. Like, that's their opinion. It's like, hey, that'd be cool. Like, I'm on board for that. That'd be really fun. But you want everything in that. Like, I don't know what's going to happen. And yes, so don't conflate hopes with possibilities. I mean, I would be pretty shocked if the government just said, anyone who's made, tons of money in Bitcoin, like we're going to pardon your taxes here.
Yeah, that's not the United States way, or at least the United States government way of doing things.
Yeah, that's not the United States I know. They're going to look for taxes. So yeah, that's my very short story made long. Is my two things is zoom out, don't get flustered with today's news, but also don't conflate what you hope and possibly more reality stuff. So hope for the best, but don't expect it per se.
Yeah, no, exactly. Like I have a lot of my net worth tied up in Bitcoin, but if it were to go to zero in the off chance that it does, I would still be all right. So that's kind of where I'm at right now. And I think that's a good place to be. I know there's a lot of people that are 100% in. They're even over 100% by leveraging themselves with various loans. And like I said, Jim and I, with being in the finance sector, we would not recommend doing this. Obviously, you can do whatever you want, but I know, especially it depends on your situation. If you're having a 20% loan to value for getting Bitcoin, I wouldn't recommend. But I know some people have took out like mortgages against their house where it's very low interest rates of 2.5%, 3%, but they have a lot of equity built up in their house. Yeah, that's probably a lot less risky than someone that's, over leveraged by 50% or whatever it may be.
Man, that just jogged my memory. I remember in the last bull run in 2017, I was working at another institution at that point, and I had conversation after conversation. I was working with primarily like people who are approaching retirement or just retired. Those were the bulk of my types of conversations. And I had conversation after conversation with people like, hey, this Bitcoin thing is making a lot of money for my nephew. I want to cash out my 401k in full. Like, do you understand the tax implications of just taking out all of your 401k at one time? I want to do this in full, and I just took a mortgage against my house for this. And
oh
like,
my God!
You realize you're 69, right? What's going to happen here? Like everyone says, like, hey, the 4-year, it's never been down in a 4-year cycle, whatever the number is there. But like, if you're 69 or 70 years old, like you don't have 4 years to make up. Like, those people who just mortgaged their house at the top in 2017, 2018, like that's a dangerous place to be. So you have to consider your personal situation with this. That's coming from a guy like, again, who's wearing a Bitcoin shirt, who is probably by all traditional standards, like I get beat up on by financial planners all the time with my stance on Bitcoin and my personal allocation to Bitcoin. And that's coming from me. You still have to you need to consider your personal situation.
Yeah.
That's what I'm saying.
Yeah, no, and I can't imagine being, and even that's like the sign of, there was a legendary investor, I forget who it is now, who, it was back in before, I forget, I don't want to say who it is, but there's basically a big crash, and like basically it was back when he had a shoe shiner, so that gives you, a framework of what time it was. I think it was in the early 1920s or 30s before the stock market crashed, but his shoe shiner was like, oh, you got to put all your money in the stock market. And like the very next day he went and like liquidated all into cash and then watched as the whole market collapsed in like the 2 weeks later or something like that. So when you hear a guy that's like, my nephew's making all this money and I'm going to liquidate everything, go into this, it's like, that's not a good time to buy. That's a good time to sell out of whatever you are in. Not saying that you should time the market, but yeah, when there's crazy hysteria or euphoria, basically, that's not a good time to be. I want to ask one more question before we wrap up, if you still have time, Jim. So I don't think we even asked you on the other podcast, what got you into Bitcoin in the first place? And I know it seems like full cycle. I didn't even, talk about how you got into Bitcoin at the end of an episode, but I don't think I ever heard this story.
Yeah. I mean, I'd say like most people, like initial exposure was brushed off quickly. So
Yeah.
2012, my wife and I were poor ski bums living in Colorado, and I worked with a guy who he begged our bosses every other week to pay us in Bitcoin or pay him in Bitcoin. I paid no attention. The reason was this guy, like, I don't think he was ever not high, like ever, like on the job. So I put zero credit in what he had to say. So he talked about Bitcoin. Yeah, that was it. So I just missed it for years and years. And I've been listening to the Investors Podcast, We Study Billionaires, with Preston Pish and Stig for since the beginning of the show, basically. And just had a lot of trust in them. They're value investors. They read good books. They love, these giants in investing. So when they started talking about Bitcoin in an actual serious manner, it sort of perked my ears up. They're not the kinds of guys who talk about these speculative things that my druggy coworker talks about. There's got to be more to this. So that's where I started looking into it. Like I mentioned in 2017, like having so many conversations with people YOLOing in at the top, that was concerning. But yeah, I would say over the last few years through the Investors Podcast, those sorts of things, I got really intrigued. And that's where, as I started learning about, just the genius of Bitcoin, the technology there is just astounding. And it's the rabbit hole. The more you learn, the more you're sucked in. And that's where I started learning about this. Like, that's why I decided, like, hey, how we're gonna allocate and inform how I'm gonna build my financial planning practice. And that's the fact that I wear Bitcoin gear, and my wife thinks it's hilarious. But yeah, I have a huge thanks to Preston and Stig for their professionalism, because their reputation allowed for acceptance on something that would not have been a pill that wouldn't have been swallowed had someone else brought it about.
Yeah. No, and I appreciate that. I actually never knew that story, so that's really funny. I hope that guy held all his Bitcoin since 2012, and he's doing what he loves, getting high and skiing or whatever it may be.
The unfortunate thing, I don't. He was a pretty lazy dude. I'd be shocked if he actually ever bought any. I think that's why he wanted our bosses to pay him, so he wouldn't even have to go through the process of buying any. I don't know, but yeah, I think most of us have a painful story that we just try to get out of our heads. Is like someone tried to introduce us to Bitcoin years ago. Like I have a client, or about to bring on a client, that heard about Bitcoin in 2009 from his roommate. And his roommate was like, man, you got to get this stuff. And he never bought any. And his roommate now his old roommate killed it. Yeah, I think, a lot of us have stories like that because we so quickly dismiss it, so yeah, I just put that out of my mind. Hey, it would have been nice to have that house in the Cayman Islands and in Jackson Hole, but I didn't buy Bitcoin in 2012 because I didn't listen to that guy. Oh, well.
I got to go see a real mining operation probably 3 months ago. It was like really cool experience, like seeing them up and running, a bunch of S9s, S13s, all the miners going. I saw over 600 units going. And the one guy said he's a little bit older than me, but he was mining back in college, back in like when you could still do it with a computer in like 2010, 2011, 2012 time frame, I think. And he's like, yeah, I'd be getting like, like a bunch of Bitcoin and then selling them for beer money. So he's like, I kept little, if any of them. But like, he's like, oh yeah, like the amount of Bitcoin I had, like if I added it all up, it would make me depressed. So like, because I think he was saying when they were like $100 a piece or whatever. I don't know the time frame. I'm gonna butcher the time frame. Someone's
Yeah.
gonna call me out now for it. But he said they were about $100 per $100 per Bitcoin, and he was just liquidating all of them for like $100 of beer money. Like that's great. Like that's for the semester. And he's like, I don't even think about it. Now he helps run the mining operation for a guy who's very very well off. So he's like, had I held on to all of them, I wouldn't be working a day in my life. But he's doing well, and he's like, lesson learned. He's now in it, and he's accumulating as they mine it. So he's happy. That's cool.
Man, that's really cool.
Yeah, so Jim, thanks once again for coming on. You always have an open invitation here. Really appreciate you coming on, and you're the first double guest we've had, so it means a lot. So once again, thanks for your time. If you want to send them to the direction of your firm that you're starting or where they can find you, whether it's your website or your Twitter account, go ahead.
Yeah, you can reach me at Jim Crider TX on Twitter. I think that's my Twitter handle.
Yes, it is. I checked it, so I got you covered.
All right, Jim Crider TX is in Texas, and then my website, it's Intentional Living FP, as in financialplanning.com, and you can go there and / amateur investors. I'd be more than happy. You can throw 15 minutes on my calendar if you have a one-off question about anything, like how
taxes, whatever.
Yeah, taxes, my 401k versus how do I do a mega backdoor IRA conversion? One-off conversation, or if you want to sit down and actually like talk about what is financial planning and how's Bitcoin integrated into that, I would be more than happy to talk through that and give you help anywhere I can.
Thanks so much, Jim. I know you're talking about you have all these Bitcoin t-shirts. I need to get you one from our store. I'm going to send it your way, so that way you can rep the Amateur Investors t-shirt. We got a couple good ones on there for sure. So right. Jim, thanks once again for coming on. As always, everyone, you can go to Facebook, Instagram, Twitter, LinkedIn, you name it, our website. You can check out that we're selling t-shirts, cups, mugs, bags, whatever. And then we're also building Bitcoin nodes for those Bitcoin plebs that don't have a node, but that have at least, I recommend it having at least $500 or $1,000 worth of Bitcoin first, and then start investing into the node. It's normal. I think we priced it at like $350 right now for building it. That's set up and everything, shipping included. So really looking forward to it. And thanks everyone for listening. Catch you next week. Have a good one.